Hey, everybody, and welcome to another episode of the Business Barbershop Podcast. I am Chris,
I'm Keane.
and today we're going to have a cornucopia of thoughts and ideas, but we're going to talk some business talk today, I think, mostly. So if that's your cup of tea, pay attention. All right. Okay. So we just wrapped up, by the way, we just wrapped up Keane's 3-step plan for financial domination. Essentially, if you're catching this and you literally just haven't gone to the last 2 episodes, just scroll back 2. They're actually super good. And Andrew was here for the second part, so I thought it was a lot of not just interesting, but also educational, helpful. So go listen to that. But today, I want to move off of Keane's financial independence, and I want to just rant for like 5 seconds. Actually, I want to just give everybody out there a little bit of advice. If you are looking for a job, the hardest way to get a job is to scroll through job postings and apply to as many job postings as possible, hoping that someone is going to get back to you. Okay, that is the and by the way, if you're marketing and you're doing like cold outreach, that's also the least likely way for you to get responses is to have a generic thing that you send out to every single person, no matter who they are or what they do, and just hope that you get a 1% response rate. Instead, take 30 seconds and read the job post.
Oh yeah, I know what you're talking about.
Not only are you qualified, but what are the next steps if you are qualified and you are interested? Because I guarantee you, you are missing out not only on several opportunities, but you are missing out on the best opportunities. Because the people that take the time to craft a good job post and description and ask you to do something specific actually care about you and they want to have a good team. And the person that is going to hire you into a position like that has done the same thing for all of the other positions, which means you're actually going to go to a place that's probably at least mildly decent to work for. Okay. So read the whole job description and do what it says. If it says send a resume and a cover letter, don't write a cover letter in your email. Send a resume and send a cover letter. Attach them. Just like follow the directions. The resume and the cover letter, by the way, are important. But if you don't just do the initial step, you don't even make it to phase 2, which is getting those things read. They just don't even get looked at. It is a test to see if you are actually interested in the job and if you are detail oriented enough, just like at a baseline to read the whole thing and just follow some very, very simple directions. Okay. So just do that. I think I'm at almost, here's why. And by the way, if you're listening to this and you are interested in a job, look me up on LinkedIn. You will see my job post. Go to the job post and read it and see if it's for you. I'm going to tell you a little bit about the job. Basically looking for an executive assistant. My office manager is moving. She's awesome. Her husband got a job in another state. This is kind of an in-person job. So I need somebody else. I'm taking the opportunity because she's leaving to sort of expand this role a little bit. So there will be some in-office things to do, just sort of administratively. But then there's going to also be just a lot of tagging along with me and doing all the sort of craziness that I do on a daily basis with my 3 different businesses. So if that might be for you, if you have experience doing like stuff like that for somebody, then go find my job post and apply. But please apply in the way that I ask, because like that's the whole point. Okay. So thoughts on that, Keane? Just in
Yeah,
general.
my first thought is it's a rant because as a boss, you set it up that way. You set the test and you're watching how people are failing at it. But if you think about the audience of who's listening to this, it's a great tactic. Like if you're going through the hiring process,
100%.
because you're going to see if they can follow directions. Have you ever heard about the that book, the checklist manifesto.
Yeah, I just read it recently, actually.
Mm-hmm. You remember the
Super
story
good.
about the was it Van Halen? I think they had the instructions about the M&Ms
Mm-hmm.
in the changing room.
Yep.
Me being super judgmental, when I first heard that, I'm like, what a bunch of prima donnas that they're asking for this. But it
Yeah.
wasn't that at all.
You're like, who's this prick that wants all the brown M&Ms gone, or whatever the specific?
Yeah, my first reaction is like, of course, Rockstar is going to be a total, prima donna and ask for that. But it had nothing to do with that. It was actually quite brilliant. It was about making sure that the people who set up the stage are following directions, and if they didn't take out all the brown M, if there's no M&Ms in the changing room, or the M&Ms don't have all the brown ones taken out, then they could trust that their attention to detail isn't there, and they know they need to double check everything else they're supposed to do before they start the show.
That's right. It's like an easy litmus test. Can you read and comprehend and follow directions?
Mm-hmm.
And like that is the step one. You just want somebody that's able to do that. And
It
I'll
was
tell you
really brilliant.
yeah, for sure. And that I've done that literally. I don't even know where I heard that from or learned that from, but I do that with all of my jobs, all of them. What sucks is all of these people are applying on LinkedIn because I guarantee you they're just reading the post and they say like, oh, this seems interesting, or literally they just see how much money it is and they're like, I'm interested in that. And some of the people on paper look like they're pretty freaking qualified, but it's like, you got to read the whole thing. Like if you're
Well,
that good, then why
and some
aren't you?
people are really good at making themselves look good in interviews and resumes, but it's
That's
these
true.
kind of tests that you would be able to see through it.
Yep. Yep.
There's
Another
some
thing I'll
people who
tell you,
literally their only skill set in the workplace is how to get the job, and they figure
100%.
out every way to dig their nails in and make it hard for you to get rid of them.
Yep. I'll tell you what phase 2 is, by the way, as well, which is sort of a different test of a different set of skills, which is I have people send me a short video that tells me just a little bit about them and what is appealing about the job. And again, it's can you follow instructions? But there's an added element now, right? Are you familiar with technology? Are you willing to do something that maybe is a little uncomfortable? Can you problem solve? Because you're going to have to figure out how to record the video, download it to somewhere, upload it to somewhere, or attach it to an email. And it's not that hard to do, but for some people that's going to be a barrier. But for these type of positions, you want someone that's a problem solver that can operate on their own and that is sort of not afraid to do new things or just confront challenges head on. And that's kind of like phase 2. So man, but it is just incredibly frustrating.
I think
So
that you're happy you're doing the test, but it's frustrating that some people are failing at it. But hey, that's part of the process. I always tell people that when you're hiring, it should feel a little bit like that show, The Bachelor.
mm-hmm.
10 people, 9 roses, 9 people, 8 roses, 8 people, 7 roses. But I mean, in this case, you could eliminate 70, 80% of them right out of the gate.
I think I've literally had almost 60 applications. I think I've had like 3 people respond correctly. Only 3. It's like,
well, how many A players can you find? I think to
I
me
know.
that's an inspiring statistic. What if 90% of the work you need to do to make sure they're a qualified candidate is done through one test, and then you don't have to mess with the other ones and interview all the
I
other
know.
people?
Well, no, I know, but it still sucks. Just a lot of time. It's like I could be spending that time doing something else.
Mm-hmm.
And it's not even something, I guess it's something it's something I would have this person, by the way, that I'm going to hire do in the future for me. But, I'm that person right now. So I got to do it. But, man, sucks.
Well,
But
and I don't,
yeah.
and I personally feel like you should only get so far separated from the hiring process.
Yeah. But yeah, I just mean like, yeah. So what I normally would do is so they would do this round 1, which is like, I only want to see everybody that does the right stuff. All of the other people that just don't follow the directions, they automatically get rejected by somebody else. But like I'm trying to be, respectful of people. And so I'm rejecting everyone. I'm not just not responding to them. So it's still kind of a form for me, but it still just takes time, you know.
Mm-hmm.
And plus, you get to see everybody that you're rejecting. And you're like, oh, you know what? You might have been decent. You might have been decent. Because I don't know. But anyway,
Yeah, but we don't want decent. You want A player, so.
especially for this role, this could be like this would be like it's not exactly like this. I don't want to say it like this, but I'm going to. It's kind of like who is Gwyneth Paltrow's character in Iron Man?
Oh, Penny.
Yep.
Or Potts, something, Pepper Potts or whatever her name is.
Yeah, Pepper. Yep.
Yeah.
Kind of like that, where it's like they're like they're rolling with you across all these different things, and really kind of like your right hand and helping you with all sorts of different stuff. So
mm-hmm.
it does need to be a good fit, the right person.
Mm-hmm.
So
yeah. I can give one of my tips on hiring.
Yeah, let's go.
So now that you have your 3 candidates who did do it correctly, did you hire someone yet?
I don't have 3 yet because of the 3, only one's qualified. So yeah, I've only had 3 actually just raise their hand correctly. They're not like, I don't even have 3 good candidates yet. I only have 1. So I'm still waiting, basically.
Well, hopefully you can get at least one more good candidate before you go through the next test. But the next test I learned from one of my coaches in the Corps, and it's been gold. It does not work if your person is ADA disabled. Okay, so let me just start with that. But
I already know this test, but I'd tell it. I've used this before because we've talked about this a long time ago.
Yep. If you need a lot done, if you need someone who works fast, you need to make sure they can keep up with you. And you don't have to judge based off of their size, height, or age. If they have that personality, keep up for a short stint, they can keep up.
Yep.
And that test is you set your interview at the furthest room from your entryway, which my current office doesn't work great because it's not that big of an office. But still, I guess a way I could do it is I could lock the front door, and so I have to when we walk up the staircase. But once you meet them at the interview, introduce yourself. I'm Keane. It's nice to meet you. Please come follow me. And then as they follow you, you walk as fast as you can to the room that you're holding the meeting. And when you get there, you turn around and see if they kept up with you.
Yep.
That tells you so much. Like, you don't tell them, you don't prep them, you just go. And if they don't keep up, they're not going to keep up with you in the workplace. I've had athletic, long-legged, younger than me, and I smoke them. I lose them in the office. Don't know where they're at. I've had people who are older than me, shorter, overweight, and they work hard. And if they keep up, they keep up.
Yeah, they're hustling.
They might lose their breath a little bit on the way following you. They're like, "Oh, you're walking really fast," right?
Yep.
But it's like, but in the workplace, in reality, right? They're not going to have to do something so physical that they don't have to do it for a prolonged period of time. So if they're a little overweight or out of shape, but they kept up with you, they'll keep up with you at work. Don't worry about that, right?
Definitely.
But you can't try to judge based off what they look like, because that's not the result you're going to get.
Right.
Which is funny, right?
Yep. Okay, so here's my next question for you is, I think you have kind of had someone like this before, but have you had someone like this before? And if you don't now, why don't you? Because you could definitely, I think, use someone.
I do, but the list of things that she helps with is pretty long. So it's become, if we've talked about whether or not we want to separate that role from the assistant I have now, but I've always had a person of that nature. I don't really operate without a person of that nature.
Yeah,
honestly.
Are they in your email inbox?
Yes.
Yeah, mine too. I have I have somebody like that right now, but she's a VA, but she's in all the attorneys' inboxes. But I need somebody that can be in all of my inboxes. So she's in one of 4, basically. And just want somebody that's here that can do just all of the things that.
The one thing I had an intention to implement, which I've not done yet, is, but we have the hardware for it, is getting it set up so she can track my text messages.
Okay. Yep.
So I have an
Yeah,
Apple
you get a
computer.
ton. I don't get that many text messages. I know you get a ton.
Yeah. And
Yeah,
so
that's tricky. There is a I can tell you there's a way that you can do it, but it requires an Android phone, as far as I know.
well, no, you can do it on Apple too, but you got to give them an Apple computer then, so they can see it in iMessages.
Oh, yep. Okay.
Yep, and so
Good point.
that's how we have it here, but we haven't set it up yet. So I got a desktop every computer. So there's a there it is right there, testing it out.
Got it.
Yep.
See, I would have like the only problem is I don't want somebody looking at all my text messages
That's when you need the other apps. That's when you put them
because they're
on
not.
WhatsApp, or those people,
Yeah.
those texts need to go on WhatsApp or Signal or
Well, I can tell
Telegram.
you too. Real talk. I have a work phone
Right.
basically, and I don't. And actually, it does all the text messages for the firm, the law firm, because we text people like when we're checking in on fee agreements or questionnaires and stuff like that. And that's how I know you can do it with the. I didn't even think about doing using like iMessage, but there's a program you can use on your Android. It's called Mighty Text, which basically does the same thing. So I might
Well,
just need
instead
to
of having
use
a
it.
work phone, what we did is we have a service called Ring Central,
Yeah. Mhm.
and then you
And
can
you
do
can
call to
text through
text.
there.
Mm-hmm.
We use Nextiva and you can text through there too, but I just haven't set it up. But I didn't also, I don't know if this is Ring Central too, but what I like about the setup that I have, and hopefully this isn't violating any federal laws, but it just texts as if it's coming from a legit cell phone, you know? So like you don't have to like hit stop if you don't want replies and all that business, because we're not doing like marketing messages. We're talking to individual people. So I don't think it'll really those things apply, but I didn't want it to say like a generic commercial text. Does that make sense?
Mm-hmm. Yep.
This is just like it's coming from a phone. So, I think it'd be hard to scale this up maybe like significantly, although you could do it, you just had multiple people. But yeah, I looked at using Nextiva, but it was hard because it just well, it's too compliant. It's set up for a different purpose, sort of like that mass text, which we don't do any of that kind of stuff. It's only one-to-one text messages that we send out. So
Yeah.
anyway,
I don't do a lot of mass texting either. That would be, I could see myself doing it sometimes, but like, like if I'm going to have an event or whatever,
yeah, we're not doing events though. We're just talking to clients basically,
Mm-hmm.
just following up with people. So, okay, cool. Well, that was my rant. I want to talk about that a little bit. I want to talk about
But,
hiring
for the
people.
business owners who are hiring, this is a great lesson, right?
Yeah, the other thing too is, I made some videos on this, just talking about hiring and people coming in and out. It's like, um, people are like, "Oh, are you angry? That your people are leaving?" I just no. I expect everybody to leave at some point in time. It's
Yeah.
just, it's not. We're not married, even though you can end a marriage. But it's like people have lives and people's goals change and their needs, their situations change. And like Karina, she's moving to Wisconsin. So it's like her husband got an awesome job there. It's like, how can you be mad about that? It's like, while
Yeah.
you were here, you killed it. So,
Mm-hmm.
grateful for that. And
I
I'll
feel the
just have to
same.
find somebody else,
Yeah.
and I fire people all the time too. Not all the time, but you know, the ability to end the relationship goes both ways.
Right.
So you can't really feel bad when people leave if you retain the ability to make them leave.
Mm-hmm.
So
Yeah. Some people take that stuff really personal.
yeah, like they owe you something. It's like,
Yeah.
this is a business relationship. While you're working with me, I expect you to, you know, act professionally and do a good job. But it's your life. You go do whatever you want.
Yeah.
And if you make bad choices and it ends badly, that's okay. It's
Yeah.
fine.
Yeah.
We're fine.
So there's another topic I thought was probably worth bringing up. Something I was not. It's funny how there's like you see something and it's like, oh, that's so obvious. You know how Tim kind of gave us a little formula for how he looks for these like 1% rent rule markets like, Dayton, Ohio, and all that stuff.
Yeah.
Well, that's also one of the reasons why I pivoted and started doing deals in Bremerton, because that's the closest thing that we have to our market, right?
Mm-hmm.
Higher cap rate, lower ceiling, strong government presence. But talking to the agents in those markets, it's clear that those real estate markets are starting to get a little wobbly because of the whole Doge thing.
Yeah.
And so I just assumed that, military spending, when it came to things like aircraft carriers and nuclear submarines, was going to be like hey, look, we might cut in some places, but we're not cutting there, right?
Yeah.
But it makes sense though, because with that assumption that you wouldn't cut from those categories, also comes a chance that people might get a little bit fat in how they manage things, because they know that that's the general approach to those categories, and there could be some, without necessarily, losing effectiveness, there could be some efficiencies that are created. But with that comes potential like instability associated with jobs in those areas. And so there's a lot of people like in Bremerton, I was told from a local agent, that are a little hesitant on buying a place until some of that Doge stuff kind of shakes out.
Oh, you mean like Army employees or Air Force employees? You're talking about people
or just
purchasing?
regular, because in those military towns, not all the jobs on the base are going to be true military. There could be,
Oh yeah,
contractors and companies that
sure.
do work for the military, and but for instance, like in those cities, that's like the employer. Like the naval, the naval presence in Bremerton is literally the employer. Although a lot of the jobs are private, they're not, they're not necessarily just people who work in the military, but it's a blend, right?
Sure. Yeah, that's why. For me, that's why I like to buy there, because people rent as well, because it is transitory anyway by nature. You have people coming in and out of there, not staying the whole time.
Mm-hmm.
But yeah, if you're unsure of your employment in the future, it might be hard for you to pull the trigger and buy something.
Yeah. So I'm not saying don't buy in those areas, but I would definitely revisit the strategy, because I definitely am a big believer that in real estate, the supply and demand function that drives price. Demand for most markets is jobs. They're jobs. And so if they lose jobs, then they go look for new jobs. And then when they go look for new jobs, they may be in a different city. In a different city, then that drives down the rent costs and also drives up vacancies. And so for traditional markets.
I mean, I hear you, but I think it's probably a little too early to. I mean, I guess we're talking about, decent sized investments, but
you're leaning into these things with leverage, right? So
yeah, they're just really. I don't think there's been enough.
Doesn't mean you don't have to not do the deal,
though.
but I think that you should be. I think people should be, thoughtful about how they're spending their money.
I agree. I think people should be thoughtful about how they're spending their money. I think there may be some opportunity there though to take advantage of a little bit of an overreaction.
Could be,
because
we're not talking about this is extremely early though. Like there's even if you predict there's going to be an opportunity, doesn't mean that opportunity is going to be like right at the moment. Kind of like the multifamily space or commercial office space, or downtown condos in Seattle, right? Even though we know that there's going to be a correction, doesn't mean you have to be buying early in the dip, or how much of a dip is there is to be determined. But you're right.
Yeah.
I mean, I think that if you think there could be an overreaction, I think that you have to have some kind of logic associated with it, right?
Well, yeah. What I'm saying though is people are afraid, but they are not afraid with good reason. Like there's been no indication that there are going to be actual cuts like to military personnel themselves. It's more like if I was in Washington, D.C., for example, I would not be buying real estate there. Right.
Yeah.
Like the functionality of the military, the functionality of the government, those type of spots, I don't know that I would be super worried about
I wasn't there either. I mean, I personally didn't think it was going to happen. So this is more of a reaction of like, it's actually happening though. I didn't predict that it would have that Doge would get all the way down to the point where people who service the military towns would halt their real estate, but it's officially happening. Rents are flattening out, buyers are holding back, and that's real time, right? And it's only happened in the last, 30, 45 days. And
No,
so
no,
this is just the very beginning of what we're seeing.
yeah, but I'm what I'm trying to say is I don't, and I'm speculating just like everybody else. I don't think this is the beginning of what we're seeing, though. I think this is an overreaction to what has initially happened with this new administration that's going to bounce back soon. Okay. It's like same thing with these tariffs, with all this stuff. The chances of these things happening over a very long period of time are pretty small. Like the point of all of these moves is not punishment. I don't believe. I think it's to get a reaction. I think it is to create change, you know? And I think as soon as that change happens, because this is not meant to be punitive, all of the things that are going on are going to be walked back.
Yep.
Right.
So
Like,
I'll give you. You're right. I think there's good. Let me give you an example where I think there could be opportunity in it. I started buying multifamily at the very beginning of the dip with West Seattle, beginning of COVID, and the bridge goes down.
Right.
And I started buying properties in the middle of everyone freaking the hell out.
Yep.
So it was far from it hitting a potential bottom, right?
Yep.
However, I also specifically notated that that area had multifamilies in these amazing locations that I could just buy and immediately redevelop it as condos, and it would boost the value substantially. And so as long as I saw the recovery around the corner and I gave myself a giant headwind because it was undervalued, that was a chance to buy some assets that the owners would have normally just held on to for probably another 1 to 2 generations in their family. And they're like, but this on the, like if someone's willing to give me yesterday's price before the freak out and my vacations are going up, right? So if I were going to buy in a military town today, which is actually funny because I was actually looking at a property last night, right? Where I'm thinking to myself, like all the things that we're talking about, would I just go buy in those areas as a standard purchase? No. But if I were to hand pick a couple and be like, hey, here's 4 properties that from the outside looking in, the average investor would say they're relatively the same. Commercial multifamily, 5 to 10 units, this kind of cap rate, this kind of location. But maybe only one of them I could repurpose and redevelop it in a different way, where if it was repurposed as like condos or subdivided or there's land to build extra to it, there's extra value in it. The other ones are already kind of maxed out. There's a max size building in it. So if here's a property, like let's say one of them is like a cluster of little houses and it's 10 units and the total rent's 200 grand a year. Next door, same exact thing, except for it's one big building, right? Maybe the houses get a little higher rent, but maybe the big building has 2, 3 extra units in it. So from a commercial multifamily standpoint, these properties are the same. The conditions the same, locations the same, gross rent's the same, net operating the same, right? So they could be valued the same. But if I took the big building and convert it to condominiums, A, it's going to have higher risk, B, the conversion costs more money, and C, the value upside is smaller. The one where I'm breaking up all these little detached houses into detached condos could be worth way more money as a resold individual unit. And I could use that moment in time to convince that landlord to sell it to me. And they're going to feel like they're the lucky ones who still got yesterday's price. Right.
Mm-hmm.
And for me, what I'm doing is I'm saying, yeah, I'll give you yesterday's price, right? But it's only your property, not the other ones, right? And then I have a plan for it that's different than what I would have done with the other ones. So I do feel like it's not an immediate no. And when there are losses, there are opportunities, right? It's kind of like remember when traveling basically went to total hell during COVID, and hotels were basically vacancies were through the roof.
Yep.
But a lot of people started doing hotel to apartment conversions, right?
Right. Yep.
And so, the converting the use of a property to something else to get better margins is a thing, right? It's a repurposed asset. A lot of office buildings are getting repurposed into multifamily. Even multifamily is getting a little bit hammered right now, but still not nearly as bad as the office spaces, right?
Correct. Oh yeah.
Mm-hmm.
So, office space is getting crushed.
Yep. And so that gives there's a creativity associated with when there's a downturn. It doesn't mean you just go buy into a sector at the dip. You could do that when you feel like you're at the bottom of the dip. It reminds me a lot of our conversation. Remember when we were talking about like the regional banks having their dips, right? You just bought into the whole, which I don't know, by the way, if I did better. I just put it into an ETF. But
I
when
did.
the
I
whole
bought
set,
ETF.
yeah, did you do okay with it?
I don't know. I'm looking right now. But keep
I
going.
can tell you what I
Tell a
made
story
in
about the banks.
I can tell you what I made on my regional bank investments in that 12-month cycle from the purchases back then.
Yeah.
When the entire regional bank sector went down, the drop had already happened,
Mm-hmm.
and Chris and I had another show where we talked about you said we just buy the dip, and because that's an ETF and because these stock prices move pretty quickly, I think that strategy worked fine. Real estate moves slower, right? So the strategy for one versus another one's different. But I specifically handpicked certain regional banks that I knew I knew how to read their 10Ks. I knew the ones that invested into real estate, so I knew how to read their 10Ks, and invested in ones that had strong reputation, strong financials, and I read through the recent 10Ks, and I bought those 4 or 5 banks on the dip. And over that 12-month cycle, I made about a 33% value return and an average of about a 3.5% dividend on all those investments on top of the value gain. So it's right around
Yeah.
a 36% return.
I can't remember. I can't find it, and I can't remember what it's called.
Yeah, I can't remember it either. But when you said so, I'm like, yeah, I probably put a chunk in there too.
I'm gonna keep looking though. But yeah,
yeah, here it is. The Spider S&P Regional Bank ETF.
I don't know which one. I'm pretty sure I bought something.
That ticker, which is
Oh yeah, here we go.
KRE.
Yeah. The one I got, I think it's called KBWB, which is I don't even know what that is. KBW Bank ETF.
Mm-hmm.
Let me look and see what that is. KBWB. Oh, this is just the NASDAQ Bank Index. So it wasn't a, there's a regional one that you can buy.
Yeah.
But I think I got the, this is still, I think, made mostly of smaller banks.
It probably blends big and small.
Yeah.
From that name, it sounds that way.
But that's what I bought, KBWB, and it's up 40% from when I bought it. It's not a tremendous, I didn't put a ton of money into it, but I bought it in March 2023.
March of 23. Yeah,
yep.
The regional bank ETF was trading at about 43 a share, and today it's trading at about 55. So it's up about 25%.
Yeah, and that's when we were talking about it too at that time.
Mm-hmm.
Because that's really the reason I think the reason I bought it. But this goes directly, really kind of what we're talking about, even with this real estate stuff, is I think also if you're going to be able to hang on to it for a long time, and it's going to, if you're not gambling, as long as you're not just doing something stupid.
Yeah,
it's probably going to work out for you.
Yeah, I specifically picked, I think it was 3 or 4 banks up to back. I did Washington Federal Savings. I did Truist. Yeah, maybe First Citizens also bank. But I handpicked a handful that I knew had a strong reputation, but I didn't buy on just a reputation. But I knew they're financially sound. They were ones that did really well in the subprime meltdown, which is a good sign because a lot of banks got toasted then, right? Especially their regional banks. So the right regional banks crushed it. They bought other banks with their assets at a discount and then grew their presence, right?
Yep.
And so I took all the ones I knew had strong financials that grew during that time instead of shrunk during that time. Looked at their 10Ks and make sure they didn't do anything stupid in the last year or two, and then looked at their price to earnings ratio and their dividend yield, and I was like, okay. And I picked the top 3 or 4, and I said I think it made about it was a little bit more than a 33% return when you include the dividend over that 12-month cycle.
Nice.
And so didn't do as well as I did with Meta. That one did really well.
Mm-hmm. Yep.
But
yeah, speaking of, by the way, before we get into all this is not financial advice. We're just talking about our own individual bad choices. So don't go buy anything or sell anything based on what we're talking about. But with that being said, I just liquidated all of my Apple stock yesterday.
Interesting.
Yeah. I was listening to a podcast and they were talking about different things and they made a really good point. And I was like, I cannot deny what they're saying. And
What, that their
the
AI
only,
sucks?
well, it's just not that. What they were talking about was, you know, when, what they're talking about basically super high level is that Apple has transitioned from really being a growth company to really just being like a sort of a stable company, right? And a growth company versus a stable company, like their P to E ratio is much different. Apple right now is still trading as if they're a growth company, when in fact the iPhone hasn't changed its design, in 15 years. iPads haven't changed. The Mac is still the same. Their podcast, they're losing steam to Spotify. Uh, their AI sucks. Siri still sucks. Even their text message filler sucks,
Yes.
right? Everything sucks about what
This
they're
was,
doing.
remember I was venting that other show? I'm
Yeah.
like, Siri's a
Yes.
fucking idiot.
The new operating system, nobody likes it. They tried to come out with that headset and it kind of bombed.
Mhm.
It's just like they're not doing anything innovative anymore. And
I
they've
mean, I'm
kind of
not sure if
lost
they're.
steam.
I'm not sure if they're. Well, yeah, I think they're still trading. Yeah, at the P/E ratio they're trading at, they still show that they're built for some growth, but not, it's not a crazy high PE ratio. But it doesn't. But the upside also at that price doesn't. I think that I think it's a fine asset to hold if you owned it for a while, but it's. Um,
Well, it's great if you've held it for a while, but it's on its way down, is my feeling. It's going to have to stabilize somewhere, not where it's at, because they're just not going to be able to demonstrate the growth that they have in the past. Like you can only come out with the same new iPhone so many times.
right.
Like I think they were talking about how, like, the marketing campaign they have now is because you can make your own emojis. Like that's their newest tech
Hmm.
innovation, right? It's just like you're not coming out with anything new. They don't have any other. People are going to continue to buy iPhones because they're everybody's just they're ingrained in everyone's
That's
world.
very much Microsoft and their Office suite and operating system. I think
Yeah.
their market share has been established. They're not necessarily gaining more.
Yep. Yep.
Mm-hmm.
So I was like, well, it's making sense. So I'm getting out. Plus, this is the market's going down significantly. I just like to also use this time to just like sort of buy in more because it's going to come back up, in my opinion.
Mm-hmm. Yep.
My,
Well, and
by the way,
this is how you know if
uneducated
you're.
opinion.
This is how you know that you're investing versus gambling. Is that when it keeps getting cheaper, do you get afraid? If you're afraid, that means you didn't really evaluate what you think it's worth.
Totally.
The easiest way for me to tell if it's a good investment is this: if you know the true market value of what you're investing in, then when it goes down, it's a deal. And so you buy some. And if it goes down more, you naturally want to buy more. We'll use the iPhone as an example, not the company,
Yep.
but the actual phone. The new phone's what, $1,500, $1,300 with a contract. I think it's somewhere right around like $900 the contract, I want to
Yep.
say. If someone said, hey, brand new iPhone 16 Pro Max, all the features, brand new, without a contract, on sale today, $499, limit 3 per customer. Everybody should be trying to buy as many as they can at that price, who understands that what the value of that phone is.
Yep.
And if the same company said, hey, if you missed your chance to buy it for $499, this week's special, $399, limit to 1 per customer, right? You shouldn't be looking at the ones that you bought at $499, be like, shit, could have got it cheaper. You're like, well, I love it at $499. I like it even better at $399. That sale ends and it goes back up to like, $1,000 with the contract. You're selling them without a contract for $1,200, $1,300. You're flipping them all for a profit. You knew it was worth more. If you can't confidently say that about what you're buying, then it's not investing. You're just riding hype, hoping it's going to go up.
Yeah.
It will when it's discounted, right? So, and that's how you know it's a good investment, is because you've determined its real market value. Its real market value. You're confident of your evaluation, right? And there's times where you will feel 100% confident of your valuation, and then you see an angle that you missed, and then you got to just cut. You just got to cut quick before not write it out, right? But most of the time, if it doesn't feel like the absolute no-brainer, then it's not an investment. And if you don't feel that way about it, you're probably just better putting in the S&P 500.
Yep. And that's where most of my stuff goes, though. I don't buy a lot of individual stocks necessarily.
Neither do I. Neither do I. Most of it's S&P 500. When we talk about these individual stock purchases, it's like, there it is. Move some money out of the S&P, buy the individual stock. And when it goes to the price where I can't evaluate the runway anymore, I've been notoriously known to sell an investment that I did a great decision on based on what the market says a little early. But I couldn't underwrite the value higher than where it went to. So once it hit that point, and my knowledge was beyond, like for instance, I sold Meta when it went up 70% because I was waiting for it to get to a certain P ratio. Because when I evaluated that was on discount, I was like, there's no reason why a tech company with this kind of media presence and advertising dollars should be trading at a P ratio that's cheaper than most regional banks, for instance, right? Or oil companies, right? Energy companies.
They were getting crushed.
Right. They're trading at I was like, at a P ratio of 11, if it sustained this, they would eventually start paying out these gigantic dividends, which is not going to happen, which means it's going to go back up, right?
Yep.
Once it went up to the PE ratio of where I'd underwritten the value, I sold it, and it doubled after that. So I would have went up 200% in value versus 70, but I'm fine with the 70 because that's what I underwrote the value to be. I made 70% in 90 days, and I'm fine with it, right?
Yeah.
Definitely. It's kind of like maybe if I was at the blackjack table and I knew I was lucky to double up my money, I just knew to walk away. Maybe there's a chance I could have won more, but it's a chance I lose it all too. And I just knew, hey, I'm good with this, right? Probably not the best example because I don't really play blackjack. I'm not really a gambler.
Well, you got to just scrape a little off over time.
Well, and there's that, like I said, if it's a good investment, you should have confidence of where it's going. If I didn't have confidence it was going to go up more, then why am I holding it? Move it back into the S&P, right?
Yeah. Yep.
And so that's what I did. And
well, so, classic diversification as well, right? So like you're going to take what you got and you're going to spread it out into more stuff that suits or fits sort of your investment guidelines.
Yep. Yep. Well, I will say though I didn't put a ton in Meta when that happened, and I was very confident it was going to go up. And when I made my 70% return, I was actually more upset than I was happy, because it reminded me of something Warren Buffett said. Someone asked him in a Berkshire meeting, "What was the worst investment that you ever made?" And his answer, very Warren Buffett-like, was, "It wasn't something I lost money on. My worst investment decision I ever made was knowing something was a really good investment and not buying enough of it."
Yeah.
And I'm like, yep, I know exactly what he means.
Totally.
And there's been many moments in my life where I either saw something, I didn't invest in it, or I put too little into it. But the fear because of diversification is real, right?
Yep.
It's actually one of the reasons why I really, really like the strategy of building my first, 5 to 10 million in real estate. You let it grow on leverage, like we talked about, to 15 to 30, right?
Yeah.
Depending on what your goals are. Because if you have that foundation underneath you, what's the most truest version of who you'll be in your business, in your job, and in your investments, right? Because it's like, okay, if I already know this is coming, why would I only put 10% of my portfolio Meta when I knew it was a discount? Why? So I could stay diversified. And for what purpose? To make sure I didn't blow my entire nest egg? I didn't. It's most of my nest eggs is real estate, and it's going to do its thing. So like, my reaction to that was like, that trade was the first time where I should have had the freedom to really lean into something the way that Warren does in the stock market. And I didn't do it because I still was using my old practice habits, right? And I'm not saying that when you think something's going to just be a banger, just put your whole portfolio into it. If you're new to this space, right? Again, I'm not your financial advisor. I'm not your CPA. I'm not your stockbroker, right? But I'm saying for me personally, right? I knew for a fact that there was no way it was going to stay at that price.
Yeah. Here's what I'll say though. First of all, before we get to what I was going to say, to circle back on this Apple thing real quick. Another thing that was a contributing factor was that Berkshire sold all their Apple stock, I think last year. And
he did?
They liquidated a lot of it.
Hmm.
And so while it's not an
I thought they're the
indication of,
biggest. I thought they're the biggest holders.
they were. And so although it's not an indication of what um what you should do, they are making moves that are longer term and I think should be paid attention to sometimes. Okay.
Yeah, 2024 they sold 605 million shares of Apple.
Yeah. I think that's a sign, because they don't look for exponential growth necessarily, but they do like to invest in companies that they've identified are going to be healthy over the next 3 to 5 years, let's say, right? I
Mm-hmm.
think that's fair to say, and longer, even longer timelines. They're not gambling.
Mm-hmm.
And when they get out of positions, it's something that I think you should pay attention to.
I actually been paying more
So,
attention to the positions they've been putting themselves into
yeah,
because
both.
they're
But
investing a lot in this into stocks that I'm like I'm scratching my head, and I'm not going to follow them blindly. But I'm still trying to figure out the Sirius XM play.
yeah, but it's a distribution channel. That's what they're doing it for. They're hoping that someone else is going to buy them and use the distribution channel.
You
And
think
the only
so?
reason the only reason I know that is, again, I listen to all these random ass podcasts, and they talk about this different type of stuff. And this is the opinion of the people on the podcast. But the people on the podcast are very smart and they're very right very often. And so
I still
they're
feel like there might be an underlying piece to it,
it
because
would be the
maybe
capital. It would be,
maybe the value of the satellites.
yeah, that's what I mean. But yeah, yep. So yeah, there's a reason. Okay, but now to circle back on what you were just saying about this losing out on Facebook thing, in Warren's advice to that, or his biggest failure was not going all in on something. What I would twist what you're saying a little bit, and I would say that you did go all in on the thing that you know a lot about, which is real estate.
That's true.
And for you to go all in on Facebook would have been, in a way, contrary to what I think Warren really meant when he
Yeah.
was talking about what he's doing, you
Well,
know?
and here's why when I make that reference to Meta, this is what I'm referencing to. As a person who is a consumer in tech who understands how to read a 10K and understands things like PE ratios and EBITDA, right? All that stuff. There are only I'm not smart enough in stocks to say that I for sure knew more than 10 times something was cheap, right? Um, in more recent, I obviously can spot them a little bit more in my older years, right? But when I think about like what is for sure discounted, I knew it was going to come back, and I knew from the bottom of my heart it was going to be a good investment, and I was 100% right. When it came to stocks, I would say there's probably about like 3 or 4 in the last couple of years. It was
Yep.
Meta, it was the regional banks, and a mortgage company called United Wholesale Mortgage, right? Which technically is a competitor to us, the company I worked for. But I just knew that the wholesale space had room for it to grow, and the way they were doing it, I believed in their model, and I knew the industry pretty well. And it's done great. It's grown about 100%, and it's been paying out 4 to 5% dividends to boot, right? Not as much growth lately, but I bought it when it was really low, and I knew when it was going down to keep buying
Yes.
it. That's a good case study, right? I thought it was cheap at 4. I kept it going down. I kept on buying it all the way into the 2s. My average price is in the high 2s, just under 3, and now it looks like it was brilliant. But I knew to keep leaning into it because I really believed it. But before Meta, before that, right? Examples where I'm like, duh, would have been like Windows 95. That's my first one where I just knew I was a teenager. I was in high school, but my brother was in computing. He got me into personal computing. I was mostly in it for like games and stuff. I understood I had to use it for work a little bit too, but I was very early in that space, right?
Yeah. Yeah.
It did take me long to figure out why Microsoft was special, because they basically made an operating system that looked a lot like a Macintosh with the open, open platform, have everyone else design software for it, right? And and I knew it was a big deal because we were using Macintoshes all through high school, and I saw the pivot work into using PCs. But as a gamer, I still understood that I'm not a gamer anymore, but back then I understood that the most powerful programs were operating this other operating system called DOS. And if you wanted to have a more powerful game, you had to get out of the Microsoft Windows platform and then load your game in DOS. And
Yep.
Windows 95 was the first time they said, hey guys, no more of splitting using some in this platform and this one. We've made it so everything is point and click, which is that whole like start me up commercial. Remember that? This
Yeah,
little start
for
button.
sure.
Remember that?
Totally.
I was like, this is it. It's game over for Apple. This is it. And I just knew it, right? And of course, I was 18 years old. I didn't have any money, right? Stock split 3 times in next year. That was the first example. The second one was I was working at a car stereo shop. Apple had already gotten their asses kicked. Basically, everyone thought they're going out of business. And then every day for a couple of months, but it happened for multiple years. But I could see the writing on the wall. All the different media platforms, the radio, the satellite radio, the CDs we're listening to, right? MP3s are getting big. Everyone's trying to figure out how to get their MP3s playing. And all of a sudden, it just became how do I integrate my iPod? How do I integrate my iPod? How do I integrate my iPod? I'm like, you mean you guys are all buying this device? It costs more than everyone else's, and it's better, and everyone's buying it, and no one wants to touch the Microsoft or all the other platforms that are trying to do something similar. Nope, this is it. It's the end all be all. This is the only one we're all going to use. And I thought, well, looks like they're going to do something special, right? And that was literally, a lot of people think that Apple kind of revived himself with the iPhone. The iPhone was kind of like, no question, iPhone was like, in today's world, that's ultimately where it came from. But the iPhone was really built on the iPod first, right? What brought them back to relevancy was an iPod, and then it transitioned into a smartphone afterwards. And that was, I remember when I saw that change happen, I'm like, this is for real. Like, I didn't even like the product, and I could see the movement going, and that train had left, and it's not coming back, right? So even if you didn't like the technology, you have to just recognize that things are changing. It's like car guys complaining about electric cars. I still see people saying, oh, if it's an electric car, it's not real. I'm like, are you guys still saying that? Like that argument is kind of done now. Like, how hard it is for a new manufacturer to enter the car industry? It's a very rare thing to see. Usually there's a consolidation and reduction of car industries, right? This conglomerate took on these companies, whatever, and it's usually reduction, not the other way around.
Yep.
And so to watch a company to jump up and take such a large market share and set its standard for vehicles is unprecedented, right? And so we're kind of past that point. And so for the grumpy car guys who don't like Teslas, I get it. I didn't like Apple products. But the truth is that ship has sailed and it's not coming back, right?
Yeah.
Like electric cars are here to stay. Apple's back here to stay. And now we're talking about, they've been considered the most valuable company on the stock exchange for 10 years, maybe 15, right? And so, there's recognizing when things are the industry shift has happened and the runway is really, really long. Working in consumer electronics, I could see that they're just beginning to tap into that. And the company was discounted so much because of how much they got their ass kicked from Microsoft prior to. There's a lot of room for growth. And so, leading up to like the last 6 or 7 years, I only had spotted maybe half a dozen scenarios that fit that kind of criteria.
Right.
But my point is that we sometimes don't owe it. But you're absolutely correct. The first thing I did lean into, I had the highest level of competency in, right? I've actually walked through my first couple of deals in 2020. I repurposed a $250,000 HELOC only to acquire $3.5 million worth of real estate in less than 6 months.
Right.
Just fucking nuts. It felt so wrong. First property, bought it for $850. Went in contract for another one for 2.1. Have no idea where the money's coming from. Kind of do. Have this plan to take the first one, condo it, refinance it, pull out not only my entire down payment, but an additional $100,000 above and beyond my initial down payment only a couple months prior, and pivot all of that into another property for 2.1, do the exact same thing, and then buy another one for 650, all in a 6-month period. And back then I'm like, I might lose everything. Everyone's going to think I'm crazy leveraging to this tilt, but I'm like, but rates are super low.
Yep.
I knew the markets were doing it in, and you couldn't convince. And what my confidence came from was, at the age of 40, there's no one who could convince me that having prime beach real estate in Alki was a bad idea on a property that I'd already pushed up the value 50%, even if there is going to be a downward adjustment because the bridge went down and because of COVID or whatever. It's like, and then what will happen? The bridge will come back, COVID will end, and this little tiny triangle of land that's the best beach land inside the city of Seattle is going to be back to what it always was, right? That's 40 plus years of living that. And then the other one I bought, the third one wasn't in Alki, it was at Kirkland, you know. And to this date, those three represent, you know, three of my best 4 or 5 investment decisions I ever made, you know. And I leveraged hard into it. If anything, I look back at that time and go, you know, the first one I did, I max cashed them out and locked them at the lower rates and paid a lot of points to buy them down. And I thought maybe I was being too aggressive, and I backed off my second one. Only took out my initial investment and didn't pay down the interest rate because maybe I was wrong for leveraging so hard into it. And guess what? Today, moving forward, I look back and go, you know, my first idea on the first one was actually the correct one. I should have done that with all those ones. I should have just, you know, pushed the rate down even further, paid the points, pulled out even more cash, right? Because now I've got all these old houses. I'm like, I don't know where the money's going to come to fix them all up.
Yes.
And I can't refinance them because they're locked in at low rates, right?
Right.
Rich people problems, right? But hindsight's 2020. But I guess my point is that there has to be a little confidence to believe in what you really believe in, and when you do that, it's nice to have that freedom that you can lean into it. And I think that for people who have traditionally not been very smart on picking stocks, most people could still recognize that there's been differences between hype. Like, what times have you been super excited about something because of hype? Look back at it. What was different from that versus like the absolute confidence that you knew for sure it was going to work? And there's going to be bangers that you miss. Like I missed on Suncadia real estate, and I missed on Tesla, right? I kept on thinking to myself, hey, these car manufacturers, they've got a lot of money, and they're not going to want to give up that market share. If, you know, I do think EVs are going to be a thing, and I think that everyone will catch up. And, you know, that's just my original thought. As I've learned more and more about what makes Tesla different than everyone else, even if I don't own one, I look back and go, okay, I get it now. I finally get it now, right? And it actually took talking to a friend of mine who was a car guy to break it down. Because I thought, like, wow, I was really surprised to hear my friend Garrett tell me how much he believed in Tesla. But as a car guy, he was a guy who tuned performance cars, right? And I'm like, you've tuned performance cars for a living. You literally made an entire living for years taking these petrol cars and making them perform on a higher level, and you're investing heavy in Tesla. And he's like, yeah, because I know about cars and how broken the model is for how they design, source parts, put it all together, right? And when you think of a car with a completely different kind of platform from the ground up, you start to eliminate so much of that waste and third-party vendor requirements that just are built into the system. And by the time these other manufacturers figure out how to unload that system and make a complete pivot, it's like Kodak trying to figure out how to get into digital photography. They had the money to do it, but they're so ingrained in a process that they can't reverse. It's more like the Titanic running straight towards the iceberg, and you see it's going to happen, and you just can't turn fast enough, and you hit the iceberg and you sink. And he was explaining that's what other car manufacturers are going to have to deal with when it comes to Tesla, because everything was designed with electric in mind from the beginning, which changes how you look at the brakes, changes the way you operate the ECU, it changes everything, the entire drive line, right? The way you shape the cabinet, right? And once he explained it all, I'm like, okay, well, that was maybe 8 years too late to an explanation for me, but I wish I heard that earlier. But my point was that because he's a car guy, he saw it earlier, right? And I wasn't going to see that, but you know, a person who was into consumer electronics, I was able to figure out like some of the other ones. And I think that if you identify something that you really, really believe in, it's okay to lean into it a little bit. Because I think even Warren said it, right? In one of his talks, he talked about pretend you have a checklist, right, of like 20 boxes, and those are your 20 investment decisions of your life,
right?
20 for your whole life. You were born, you die, with an expectancy of somewhere around 75 to 90 years, I hope, right? Yep. And you only get to invest in something 20 times, right? I think that there could be, in that list, you can knock off some basic ones. You don't get to pick individual stocks in your 401k. I know you're not a big 401k fan, but I think that these, you know, I like the match. So if I could pick an ETF, like an S&P 500, and contribute 100% of a match, right? And it's going to something I was going to invest in anyways, then I'm going to do that. The tax part, I actually don't really care about that much. right?
Mhm.
Not that it doesn't matter, but it's such a small contribution at this income level, it doesn't move the needle that much. But
Yeah.
what those decisions could be, okay, to the max and with the match, I will do this pre-tax investment in ETF I would do otherwise, right? Um, you can use that as one and just pretend it, and then once you set it, kind of forget it, never look back at it.
Yeah.
But the other ones are going to be individual decisions, right, of what you're going to do and how you're going to do it, and then execute that plan. And if you only had 20 decisions, what would they look like? And that discipline to find all the reasons to say no before you say yes is one of the most important things you have to learn as an investor.
Definitely.
Yeah.
Definitely. Love it.
So here's a question: what properties in the areas that are impacted by Doge have the most development upside that the owners don't recognize, and it was hard to get them to shake loose and let the property go, and now's the time that they're willing to do so? I kind of stumbled across
Yeah.
one last night, I think, and I think it needs to be about 15% cheaper in price, and I think it'll get there.
Yeah. You think Doge though is affecting those type of decisions for those type of people?
It's affecting. Well, there's no question that those markets is affecting the buyers and the renters at the moment.
I guess it could be for you. Could be like a multifamily where somebody doesn't sees the rent flattening out and they want to get rid of it, and where you can apply some of your magic
Yep.
formula to it and kind of
Trickle
upgrade it
fairy
in
dust
different.
then into it, turn to something
Mhm.
else. Yep.
Yeah, upgrade it in
Yep.
different ways. There's probably some opportunity there for you for that.
Yeah.
I would think. Yeah, yeah. I just think and it's so weird. I guess if you're not, these things are really affecting a lot of people very significantly, but it's that totally true human nature fact, which is if it doesn't affect you, it doesn't seem like it's that big of a deal. You know, it's
Mhm.
like if it's not affecting you or somebody in your family or somebody in your circle significantly, you just don't feel it as much. You just really don't. And that applies for everyone for everything. But I think maybe that's why I'm a little sort of less feeling the pinch, I guess, is just because I don't know that there's been a significant effect in my business, in my life, in my anything from what's been happening. Though I know there have been significant impacts for a lot of people, you know.
Yep.
So I think that's maybe just me having not my blinders on, but just a blind spot that you don't
Mhm.
you don't that's what makes it a blind spot. You don't know it's there,
One thing I do think that's important in this space is that a lot of people will hear things and they say, "Hey, that you're really smart for doing that." Um, but I always make comments to people. I'm like, "Look, I will hear people talk about things. Like you guys could talk about golf. I could hear my friend Theo talk about Manchester United, right? And
Yep.
I'll listen to the detail these people know of these topics, and I go, wait, whoa, whoa, whoa. That technical knowledge translated in this space, right? We don't think about how that law of attraction, mixed with like what they call it, your um, reticular activator, right?
Yep.
It's like you have to be in a mode that you're always looking for it. Like if you're, my daughter and I played a game on the freeway. We're driving to Kirkland, and how many red cars both ways
Right.
could we see? Right?
Oh yeah.
Renton to Kirkland, right? Not that far of a drive. Red's a more rare color, right? I would have predicted 25, 30. And we went just over 50,
Yeah.
right? Without even noticing, if I wasn't paying attention, I probably don't notice any of them, right?
For sure.
And my point is that if you don't constantly put yourself in a state of mind that you're looking for the thing that you're looking for, whether it be business opportunities and investments, you're just not going to see it. And this is one of the reasons why I'm very conscious of the kind of hobbies I put myself into, because it will make me spend more time thinking about that. Like I'm getting all these
For sure.
stupid pizza dough recipe things from me trying to plan a stupid triple date. I'm like,
Yeah.
the pizza's got to go to a rest. It's done. I got the
Yep.
recipe. These things need to go away, right? But I'm
That's
constantly
right.
circling my mind around the opportunities that are associated with it. And I'm not saying that money is the only thing that matters, but if you don't make it a daily point to think about those things, right? And even though I'm more of a real estate guy than I am the stock market, just to get my mind going a little bit, usually in the morning, the thing I turned on is Bloomberg. right? Just because everyone's talking about markets, everyone's talking about how politics, everything that's associated with investing is entering my mind, and it just changes my, instead of feeding through social media, I feed through listings on Redfin,
Right.
right?
Yeah,
You know,
for sure.
it just always a little bit every day, right? Everyone
Yeah.
scrolls through people's posts. I scroll through some listings, right? People watch some
Uh-huh.
TV. I watch a little HGTV and I watch a little bit of Bloomberg. I always make sure that radar's on a little bit.
Yeah.
And
People
then people
scroll
say
through
I'm smart.
yeah. People scroll through Facebook for entertainment. I scroll through Facebook and screenshot ads.
It's
Real talk. I really do.
fucking awesome.
Yeah. Yep. I think the other thing too, on that note, is you also take action on the things that you are learning or interested in. A lot of people fall short there. Like it's going to be scary the first time or the second time or the third time. You're not going to know what you're doing. It's not going to work out perfectly, but if you don't ever do it, it's never going to happen.
There's so many things associated
So
with that topic. I think that, the school system and the grading system that exists makes people afraid to fail.
yeah. Yeah.
I see it in my kids, but they're freaking out they don't get a 4.0. And I just keep trying to remind them, like, yo, a 4.0 is great, but a 4.0 is also like, can I walk across the sidewalk and not fall down easily? Can I walk across this balance beam and not fall down harder? Right? And but no one's giving you a gold medal for what you do on a sidewalk, right? They will give you a gold medal for what you could do on a balance beam, right? If you're good enough. No one cares about your ability to do something easy, right? If you're going to do things that are hard, you have to be able to embrace the failure.
Right. And 3 years out of high school, 2 years out of college, no one's going to care about your grades at all.
Yeah.
None. And you can be extremely successful. You can not have good grades.
I mean, it's funny is that there's all these prestigious schools, and the only one that people will congratulate you for still years after you graduate is Harvard.
Mm-hmm.
In small circles, someone will care that you graduated from Columbia, right? And if you're in mathematics, MIT, right? But if you're talking about the general business world, for someone to say congratulations 10 years after your graduation, it's only one school. It's Harvard. And even then, from my experience, having met people who graduated from Harvard, it is not an indicator of your success. I'm like, oh yeah, I remember this guy that worked at Harvard. And he definitely had an ego for it, but he definitely don't. And look, I'm still in awe of him, like meeting him. I'm like, oh look, here's the Harvard graduate that I met, right? But if the litmus test of if the test of who's winning in life associated with where school falls into the career category, because I would assume that it falls under the umbrella, right? There's no question at the time I met him that I was questioning. Now maybe he's passed me since then, right? I don't know, right? But at that moment, I was like, oh,
I doubt it.
You're my first Harvard graduate I met, right?
Yeah.
And then it didn't take me long to figure out, like, oh, I've had a month where I made as much money as you do in a year, right? And it didn't mean I was.
Yeah. I just think sometimes, like, you have just chained yourself to that Harvard degree for life. Speaking of not being able to fail, not being able to do what you want, like nobody looks down on anyone more than a Harvard graduate that's not successful or what, however you would define that. Right.
Mm-hmm.
It's crazy. By the way, we got to wrap it up.
Yeah.
And we can talk more about this maybe next week. We can talk about this stuff forever.
Yeah.
But I want to end on a high note. John By and I played in a golf tournament this weekend, and we won. We won the net and the gross. Both.
So you guys compete as a team.
It was a 2-man scramble. So which means we both tee off, and then we pick the best shot, and then we both hit again, and then we pick the best shot, and we both hit again. And so we competed against everybody else is playing the same game, obviously. And there's a net game where you have like a handicap. So I think we got like 10 strokes just based on our handicap. So like 5 extra shots aside. And there's a gross game where you don't take any strokes. And we won both. So we won both the net game and the gross game. So we had the best score out of everybody just straight up. And we had the best score out of everybody if you count our handicap holes. So
congratulations.
Domination. So that was fun. But
yeah.
Yep. And don't hardly ever play golf. So just have honed this swing over the years, but
You
we had a
you
good
are
time.
you are you are one of those people though that I I can just tell that when someone says try this sport, it doesn't take you long to pick it up.
No, it doesn't. It doesn't. I also this is the other thing that is really strange about me is I can read about a movement or watch a video about a movement, and then I can actually not like not precisely, but I can incorporate those lessons into what I'm doing when I'm actually doing the thing. Like
Mm,
that's how I've gotten pretty good at tennis, like really good at tennis. Not great, but considering how long I've been playing and how much I actually play, I've gotten really good. But it's because I'll watch like a tennis video a day and I'll learn a little tip. And then when I go play, then I can incorporate that. So I don't know why
yeah.
that is. I think it's just maybe because I read so much when I was a kid. My reading comprehension and ability to just sort of like absorb those things is pretty high. But yeah, one of my
I
hidden
think that it's always good to
strengths.
recognize that, like, there's weaknesses and strengths that we're naturally born with, and there's learned, and then there's established skills. And I think that there's a real value in identifying that your skill, that the thing that you're naturally uh, you pick up quickly, is worth more than all the things you're bad at, you're trying to get better at.
For sure.
It's like, here's the 10 things. It doesn't have to be 10, it could be like 5 things or less. I think that for me, it's probably, probably 3 or less,
Right.
right?
Right. Yep. Yeah.
Where it's like, wow, I see it now. This is something I have, other people don't. For me, it's this like long-term application of knowledge into like a strategy and plan, and I can pull it from things I've learned 15 years ago, right?
Yep.
Taxes, development code, financing strategies, brand strategies, and I look at a property, I'm like, oh, here's what we should do with it, right? And if I learn something new, I can keep piling on those ingredients, and I never have to reference like a process I designed earlier. It's all right there. And so I used to think I learned really slow. I wasn't great at school. I learn slower. I read slower. It takes me longer to really embrace the thought process.
Yeah.
But I've learned that it's not because it's an intelligence thing. It's more like I'm learning like a train picking up momentum. I might not pick it up as fast as everyone else, but once I get going, it's always a part of me. It's not fleeting. I see other people who learn things quickly, and I see it fleeting. That 5 years later, like I don't remember any of that stuff.
Yeah.
I'm like, really? I remember things I've learned like decades ago, but it's a slower learning process. And it's actually, and once you recognize that thing, I think it's also something that if you start to see it in other people, it may not be the exact same skill set, but you can see that they have this special thing. I think it's, it's kind for people to be able to express to people when they see that in them, because it's becoming that, like I said, that most true version of yourself.
Yeah.
And that most true version of yourself is probably going to get you way more success than trying to fix all the problems that that you're weak at.
For sure. 100%.
Not that
All
you
right. That's a
should
great
not that
place
you
to
shouldn't
end.
work on your weaknesses, but
Yep. That's a
um,
great. I think when it comes to weaknesses, you should work on your personal weaknesses, on your weaknesses of character that can make you a better person in your life, more so than like I'm not a good reader, you
right.
know? Like I would much rather respond better to criticism than be a better reader, Or, you know what I'm saying? Like
Yep.
how can I treat my spouse better or my family better or my kids better? Where am I, where am I falling short there? Those are the kind of
Yep.
things that I'm trying to be better at, more so than like, I don't know,
It's a wheel of life talk. That's our next combo for the next show, I
reading the
guess.
code better. Yeah. Okay,
Yeah.
for sure. All right, let's wrap up there. If you made it this far, congratulations. Think about some of your strengths, focus on those strengths, and we'll be back again next week with more amazing content. All right. This is the Business Barbershop Podcast. I am Chris.
I'm Keane.
See you later.
See you guys later.